REIT's business in more detail now. In the Johannesburg Open Exchange studio is George Sibanda from Webber Wentzel, and also in Cape Town I've got Anton de Goede from Coronation Fund Managers. George, welcome. Can we start with you? Would you agree with what Mark Edwards just said? This is going to mean that a lot of unlisted properties are going to come to the JSE.
Morning, Lindsay. Thank you very much for having me. I would agree with that because currently the custodian of the REIT structure is the JSE, and an entity, a property entity, has to be listed on the JSE in order to take advantage of this new structure. I definitely see a strong pipeline, and at Webber Wentzel have been seeing this, of unlisted property entities looking to list in order to take advantage of the structure. Personally, I know of 3 new listings that are likely to come to the market in the short term. So we think there's going to be a lot of activity in this sector.
Which is always good. It's always good to see new entities coming onto the JSE. Anton, from your point of view, what does it mean to a fund manager? Does it automatically mean that you sit down and say, goodness me, we must increase our exposure because of whatever reason it is, whether it be a tax treatment or the fact that things are more transparent? How does it work?
From a fund manager perspective, I don't think things change a lot. What it does do is it removes the tax uncertainty that was within, especially the PLS structure, the property loan stock structure, and the capital gains tax liability that used to be there for property loan stocks. So in the new REIT structure, they're not capital gains tax liable. So that removes that tax uncertainty.
Okay, so it's the property loan stock that really benefits rather than the investor like yourself?
Well, at the end of the day, it removes the uncertainty. So although from a distribution point of view or income point of view, it's not going to make a huge difference, it just from a certainty point of view is making a difference. George,
there's such a body of information on the internet and bombarding websites at the moment. It says here, previously a property loan stock would receive rental income that is distributed mostly in the form of debenture interest. The company was allowed a deduction and the interest was taxed in investors' hands. The property loan stock then paid tax on profits after the deduction at the company tax rate of 20%. For every winner, there's a loser. Who's the loser here? Is it SARS?
It would be very difficult to say that they are a loser. There is definitely going to be an upside for them somewhere along the chain. What is happening though is that the flow-through principle is finding application. The whole process is becoming a lot cleaner, and a lot of arguments around some of the distributions or the nature of the distributions that were made by especially property loan stock funds is going to be removed or have been removed with this structure. It's very difficult to say that SARS is going to be a loser. It's probably a win-win situation in my view.
One of the questions that keeps on coming up in the evidence that I've gathered this morning is prevalent, and that's, will investors benefit? What's your view?
I think there is a benefit to investors. If you look at the direct benefits, they're quite small, and the numbers are likely to be very, very small. The main direct benefit to investors will be the fact that investors do not have to pay a securities transfer tax when buying or selling shares in a property entity. But I do think that there are more indirect benefits to investors. The removal of the requirement to pay capital gains tax was mentioned. Indirectly, that means that from the point of view of capital accumulation and future revenue growth, property entities are going to be, when they dispose of properties, are going to be able to reinvest more of those funds that they receive as consideration than they would previously. And indirectly, that's going to lead to the growth of the fund and ultimately more money in the pocket of the shareholder. The other thing that I might mention is...
Sorry, George.
Sorry.
Yeah. Go on.
I was just going to mention that the other benefit is the removal of this argument with SARS, especially in property loan stock companies, where SARS has always had the view, applying the substance over form principle, that the interest payments that were made by property loan stock companies were actually of a profit distribution nature rather than interest payments. And there's always been this uncertainty as to the nature of the income in the hands of the investor. That now comes away, and because of that, what it means for the investor is the income from the property entity is going to be taxed at whatever that investor's marginal tax rate is, and it introduces a possibility of structuring your affairs such that you can actually use debt to finance the acquisition of shares in property entities which are REITs, and be able to take advantage of or at least introduce a bit more tax efficiency in your affairs.
Anton, before you go, because I know you've got to leave early, it's all very complicated from a layman's point of view. It's essentially a tax treatment. But the other thing is that we're changing from PLS and puts to REITs, and that is what the international investment community is used to. Do you think that that will alert people to the South African property sector who might not have looked at it in the past?
I think where the South African property sector will benefit is that due to the fact that they'll be formally REITs, they'll be included in some international indices, and international investors will start looking more closely at the South African sector. And when you talk to international investors and you use the term REIT, it's a term that they're familiar with. If you start using the term puts or PLSs, they start to become blank and say it's too difficult to understand. So they will definitely benefit. The one caveat is that in the past, international investors didn't pay any withholding tax on put or PLS income, where now they'll pay a 15% withholding tax on the income from REITs. So just that's the only caveat, but I don't think that should impact the investment decision too much, because that's a norm internationally. For us as South Africans investing in global property stocks, we pay withholding tax if there's not a double tax treaty. So it's much of a muchness.
And just to summarise before you go, Anton, this doesn't mean that Coronation Fund Managers is automatically going to boost its property team and invest more in property.
No, I mean, it was mentioned that we'll see some more listings. Probably 3 to 5 listings in the next 6 to 12 months are being talked about. Some private portfolios coming to the sector, but you're not going to see a flood of another 10, 15, 20 listings. I think we had the listing boom of the last 18 months where we saw 10 to 15 new listings coming through, but I think that boom is over due to the fact that the interest rate environment has changed.
Yes, indeed. So in fact, the REIT structure is coming in it's almost towards the top of the cycle, in your opinion?
That actually, I think so. That happened in the UK. If you think the REIT legislation came in at the beginning of 2007, and that was the height of the property cycle as well. So a lot of UK companies that changed into the REIT structure had a lot of equity write-downs just after they converted. So hopefully that doesn't happen in South Africa.
Let's hope not. Anton, thanks so much for your time this morning. That's Anton Dakota from Coronations. George, just final word from you. Do you agree with what we were just discussing there? The fact is that it happened in the UK when the REIT structure hit that market. Do you think the same thing might happen here? In other words, we call the top of the market?
There is that possibility. I think there might be a subtle difference in that there was an additional cost that was added to the UK environment when they launched their REIT structure, which was in the form of a 2%. I can't remember exactly what they called it, but it was an additional structure, additional cost to it. And what that did is discourage some investors from going into the market as quickly as they otherwise would have, and they quickly realized their mistake and removed that 2% payment. But by and large, there has been quite a strong interest in the property market on the JSE, and it's probably true that we are somewhere towards the top of the curve.